Hey guys, AKIL'S here, and welcome back to another episode of the Trading Coach Podcast. Now I know I already dropped a new Sunday night / Monday morning audio only episode for you, talking about why trading courses don't work, but as I was doing my prep work for the week ahead, I decided, hey, why not try something new and provide a little week ahead breakdown for you guys where we talk about the major economic events on the calendar for the week ahead, and more importantly, the effect that they can have on the market. Now, the biggest event of all this weekend was Mother's Day, at least here in the US, and we had a good one. I told you guys in the Weekend Trading Edge video that both the boys had soccer tournaments, and well, they both came home with hardware. So for you guys that were wondering about that, there is your answer. But more importantly, I just wanted a second to do a little dad brag because that's what dads do. Now, if you're on a newer side of trading, don't worry about memorizing every single number or forecast or stuff like that. The goal here is to simply understand what matters, why it matters, and where the volatility may come from this week in hopefully the most dumbed down, simplified version as possible, because that's how I like to get down. So China already kicked things off over the weekend with their trade data release, and on Monday, they're hitting us again with inflation data. Now, inflation in China is expected to remain relatively soft on the consumer side, meaning that everyday customers still aren't spending aggressively. But producer inflation, basically the cost of manufacturers and businesses making stuff, is expected to rise because of those same high energy costs. And this is important because not that you necessarily needed a reminder, but I guess it is a reminder that energy prices is a global story right now and not just a US thing. It is impacting everywhere. And I notice that every time I go to fill up my car to take one of my kids to soccer practice. But yeah, anyway, on Tuesday, right, this is where things really start to heat up. First, we had the Bank of Japan's summary of opinions report. Recently, the BOJ had a pretty split move. We spoke about that in a previous podcast or YouTube video, one of the two. And traders are still trying to determine whether Japan is slowly shifting more towards that hawkish stance. And again, for newer traders, hawkish just means more supportive of higher interest rates. And this matters because the yen, who has also been in the news a lot lately because of the intervention, has been extremely weak, which is the whole point of the intervention, to strengthen the yen. But if traders get any signs supporting these policy changes or potential future policy changes, that could drive some pretty big moves throughout the yen pairs. Now, the main event this week, and I may be a little bit biased here, but the US market is the biggest global market and it affects everything else, is going to be US inflation data. And remember, monetary policy is what drives the markets, and what drives monetary policy is jobs and inflation. So I always get these mixed up. On Tuesday, we get CPI, and on Wednesday, we get PPI. And here's the easy way that I remember, right? The C and the P, right? CPI measures inflation from the consumer side, while PPI measures inflation from the producer side. Or in simpler terms, are prices going up for the consumers or are businesses paying more behind the scenes? Once again, the market is especially focused on energy prices right now because of the geopolitical tensions, war that's happening in the Middle East, and all the stuff we already know about that has pushed inflation higher. Now, here's the big concern, right? If energy prices continue to rise, right, consumers may eventually or will eventually, hopefully eventually, start cutting back on their spending elsewhere. And that creates a tricky balancing act for the Fed, right? Inflation is still elevated and the labor market remains stable, right? And recently, several Fed members pushed back against the idea of interest rate cuts anytime soon. Remember, we kind of started off the year before the geopolitical tensions, thinking that we would start a cutting cycle, probably 2 before the end of the year. That has gone to like maybe 1 before the end of the year, and that has gone to like probably not before the end of the year. And in fact, the Fed's tone has become noticeably more cautious and more inflation focused over their last few meetings. So this week's CPI report could have a major impact on expectations for those future interest rates, the US dollar, the stock market, and just overall risk in general. Now, also on Wednesday, we get the Bank of Canada minutes, right? A few weeks ago, Bank of Canada basically admitted that we're kind of stuck between a rock and a hard place, right? On one hand, slowing growth could justify future rate cuts. On the other hand, rising energy prices could keep inflation elevated and potentially require rate hikes later on. So yeah, no one knows what's going on right now. And because of that, traders are going to be watching very, very closely to see just how divided the policymakers are behind the scenes. Again, the minutes is kind of when you get down to the nitty gritty of not just what the end result is, but what people are actually thinking or saying. On to Thursday now, right? We're now on to the US retail sales data. And this is basically a measurement of consumer spending, right? This was pretty simple. Now, in the past, I didn't really pay too much attention to this, but honestly, this report is becoming more and more important, mainly because of all the stuff that I mentioned earlier, right? Traders want to know if consumers are still holding up despite the rising cost. And if spending does remain strong, it suggests that the economy is still resilient, but if it weakens, it could signal that higher prices are finally starting to hit us, us being consumers. And finally, we wrap things up with a pretty important meeting. US President Trump is going to have a meeting with Chinese President, I always mess this up, Xi Jinping. I hope I didn't butcher that. If I do, I apologize. There's a lot on the agenda for what has been told they're going to speak about. Trade relations, tariffs, AI, agriculture, Taiwan, energy, and those ongoing Middle East tensions. Now, remember, anytime you combine geopolitics, you combine trade discussions, energy markets now, and honestly, just Trump speaking in general, there's always a potential for a surprise and surprise headlines and unexpected volatility. So, yeah, be aware of that. Especially because there's already murmurs about the disagreements they have over sanctions and oil and stuff like that involving Iran. So to wrap things up, this week really comes down to three major themes, and these aren't going to be any different than the norm. Inflation, central bank reactions or insights, and the geopolitical risk. For traders, what this means is this, right? Despite the already uncertainty that we have with the Middle East stuff, any kind of big results or surprises here can also mean elevated volatility across all markets, to be honest. And again, we've got pretty much the entire week covered, so we've got to pay attention every day. So stay patient, stay disciplined, and remember, you don't have to trade every headline, right? Sometimes the best thing you can do is just sit back and wait for the market to show its hand first. Predictive in our analysis, reactive in our execution. So I hope you guys enjoyed this breakdown. I hope you have an amazing week and good luck in the markets. Hey, if you like these types of videos, again, trying something new here, hit that like button to show me. And yeah, if I get enough of them or enough comments, maybe we'll make this a weekly thing to go along with the weekend trading edge video, which is more of a technical breakdown. Anyway, I'll see you guys throughout the week. Until then, plan your trade, trade your plan. Take care.